Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. And today we're going to discuss a trading system. It's a whole system that uses only one indicator, two if you include price action. And the reason I'm covering this one today is that we get a lot of feedback, especially from new people into the boot camp that are really willing to do the hard work. But then sometimes it goes too deep into this rabbit hole of using everything you possibly can on the charts. Now, if you're a regular viewer of the channel, which by the way, if you're not, it would mean a lot to me if you can click down and subscribe to the channel, especially if you find these videos helpful and you've actually made some money, especially if you made some money. I'd love to hear from you. Leave feedback in the below the videos. That would be awesome. You know that most of what I do is tape reading, and I actually don't use that many indicators. As a matter of fact, I don't use any at all. I do use moving averages, which is something that we're going to talk about here, but they're kind of a little bit lower on my list as far as using them as an indicator. And I'll tell you why, because I think it's important. Many traders, including myself, when you first start moving averages and you see a stock going up and pulling back, you kind of feel like, all right, I read it in a book somewhere that when it pulls back to the moving average, that's where I should buy it, and they just buy it. And then what ends up happening is it just kind of drifts slowly past the moving average and it keeps going down and down and down, and now the trader gets stuck and they're not sure what to do because they read it in the book. So what we're going to talk about today is a strategy that works whether you're a day trader or a swing trader, and it's a complete strategy with entries, exits, direction, everything. It's really simple. I think anybody can use it. But I want to make it clear, you have to stick to the rules. No strategy works without sticking to the rules. So I'm going to verbally tell you what the rules are first, and then we're going to go to the charts, and we're going to see how you can use it both as a day trader, as a swing trader. It helps us identify the order flow as well as entries and exits. By the way, exits on winning trades seem to be the single biggest issue, which is a great problem to have, right? You're actually in a good trade and you're like, my gosh, I'm not making enough of my winners. That's a good problem to have, as opposed to when somebody first comes into the boot camp and they're like, I'm overwhelmed, I'm lost, and I'm not really sure what to look at. I promise everybody, and I make you this promise too, if you're in the boot camp with me, and you can click down and find out about that over the 30 days, from the time you start to the time you finish, I promise by the end of 30 days, your biggest problem will be holding your winning trades, which is a great problem to have. I'd much rather have that problem than feeling like as soon as you put a trade on, it's moving against you. And we covered how to avoid that in a recent video as well. So we're going to go over to the charts. We're actually going to start out with no indicators on there, and we're going to go down just based on how the stocks were trading yesterday. So there was earnings last night. We're going to start out with Netflix, but we're going to start out with nothing, and then we're going to start out with the system, so to speak. And I guess you could call it a moving average crossover system. But again, strategies only work if you actually follow them. So if you follow this and you have some success, absolutely leave a comment, definitely subscribe to the channel. And if you really want to take this to a bigger level, because don't forget, in between entry and exit is how you manage the position. And that's really a big part of what we cover in the trading room. So there's a next level of understanding what I'm about to show you. What I'm about to show you is the setup. Then you got to really understand share size, leverage, risk management, all of that kind of stuff. So let's head over to the charts and let's take a look at it. All right. So we're switching things up today. We're actually going to a different color charts just to wake you up a little bit, and myself. So you know that when I do my charting and when I do my tape reading, I'm very big on, all right, what level does a stock need to get through? Where in the world is the right price on this stock? And what's interesting here, this is actually a good example here too. I like to look at a chart and say, what's the real price that the stock is having a hard time getting through, not what is the high or the low of the resistance. And that's really a part of what tape reading is. So you can see here, this is the price where it started to have a problem, and then it kept failing over here. So this breakout here is kind of not really the right price when it came back in, because it failed again over here, got through, and then failed back in immediately, failed again. So this confirms that all the way up here is not the right price. Down here is. And then we finally got above and through there and paused, and then we pulled back. So this really was the best trade of the scenario. So you'll often hear me, if we're in the room together, say that's the right price. Until that's not the right price anymore, or until there's an imbalance in order flow and pushes it out of that window, that's the right price. So you'll often hear me, so this is basically how I work the charts, and we do this back and forth. We get some traders that are like, can you show me something in the beginning so that I can get some quick wins? I know there's more to it. I understand order flow. I understand learning how to read the tape. I understand momentum and that kind of stuff. Can you just help me get a quick win while I'm earning, while I'm learning, so that I can get some easy results in advance while I'm going deeper into understanding order flow and reading the tape? So that's essentially what we're doing there. So if we go over to the SPY actually obviously has a bigger window. So we've been talking about this here, and that would be where we would draw a new box in the SPY. So again, this is all part of tape reading, and I'm doing this very intentionally because there's a point that I want to make, and because it's kind of like a caveat or a warning a little bit, or an advanced lesson. That might be a better way to word it. So this is the tape in the SPY. This is the structure of the SPY, where right now that's the right price. So we had this nice bounce off the lows in March. We made new highs here, broke the trend line here. So we broke this trend line here, and then we actually went into this box. Now, originally, if you're new, the box was originally up there, but then I made adjustments. I adapted to the most recent price action, and now you can see the SPY is kind of like just drifting above this level. Not really a lot of momentum. We're not seeing very clean, well-bid candlesticks like this. So here's the point that I want to make. I'm about to show you the system, but the system does not usually take into consideration what I just showed you here, or what I just showed you in Netflix. It generally doesn't follow or doesn't pay attention as much to what's the support and resistance. Is there a price it's stuck in, and should we not do anything while it's stuck in that price? So I'm going to remove the moving averages here. Oh, gosh, that's not what I wanted to do. Oh, man, hang on one second. Hang on one second. All right, I'm actually, we are live. All right, so we're going to use a 10 and a 20 moving average. A 10 and a 20 moving average, and we're going to make them, one of them is going to be green for go, and the other one is going to be the 20. Now, before you ask, I use a simple moving average, and we're going to make this guy white so we can see the crossover. Where's the other one? Oh, we got to turn it on. Okay, so here's the system. So what I wanted to do was remove these indicators. So you want to write this down. We're using the 10 and the 20 period simple moving average. So here's the key. The 20 period moving average in this case here is your primary trend for momentum. Okay, it's the most recent price action, and that's the immediate trend that we're trading. Now we're going to use two different elements on the chart to determine entries and exits. The first one, let me come back to the screen for a second. The first one is going to, so the 20 period moving average is the trend, the short-term trend that we're trading for momentum, the short-term trend that we're trading for the next move. Okay, this is not longer-term trading, it's the next move. The two indicators, the two pieces of the chart that we're going to use to determine entries and exits are the 10 period moving average in the candlestick itself. So we're not making it complicated. We're keeping it super simple. We're using the 10 period moving average, the 20 period moving average, and the candlestick. So essentially, I'm going to walk you through it now, and then we'll go through a few charts so you can understand. Let's say, for argument's sake, the 20 period moving average is trending up, and price and the 10 period moving average is below the 20. When the candlestick closes above the 20, that's entry number one. When the 10 period moving average closes above it, that's entry number two. And as long as both of them are above the 20, you remain in the trade. So it's a way of holding a trade longer. If the candlestick closes back below the 20, that's exit number one. So you book profits there. As long as the 10-period moving average is above, you remain long that second half of the position. If the 10 crosses below the 20, then you would get out of the entire position. And if it triggers again, you get back into the trade. So we're gonna, I know that was a lot. You might have to watch it more than once. We're gonna go to the charts and you'll be able to see some ideas here, okay? So let's head right back over and we'll do a few examples, which is obviously much easier. So in this window here in Netflix, actually, let's use two of them, actually. We can go here where the 10-period moving average and the candlesticks are below the 20. So right here, this candlestick here on March 23rd, price on the candlestick on the daily chart closed above the 20-period moving average. And then over here, which is 7 days later, you would add the second piece. And the reason we do this is that it's confirmation that the reversal happened in this case. So 7 days later, you would put the second piece on. So we ride this trade, ride it until here, where the first time that price closes below, which is now from almost 2 months later. And then all the way over here, about a week later on June, the moving average crosses below, and that would be where you would exit the second piece. So you had a profitable trade all the way up to here. Now you can see price and the moving average are below the 20 again. This spot right here is where you enter your first piece, and then all the way over here. Well, actually, no, let me take that back. Price crossed above, and it needs to stay above. So it did not stay above, so you would exit. So this is real world trading, right? Crosses back below. Right here, you have price and the moving average within 2 days of each other, both crossing back above, and then you ride this profit up. Now, obviously, Netflix had earnings yesterday. The chart's completely different, but you get the idea. So let's actually go to DocuSign. This is probably a really good example, an extreme example. So we've been trading this stock a lot. Lately, it's been very difficult to trade. These last 4 or 5 days, it's been very challenging, but prior to that, it's been very easy. And let's see what the longer term picture of DocuSign could possibly look like. So right here, price moved below and the moving average moved below. Then right here on March 23rd, wow, very similar to Netflix, price crossed back above the 20-period moving average. And about a week later, 4 or 5 days later, the moving average crossed over. Now what's interesting here is the candlestick closed back below the 20, but the moving average did not. So technically here, if you're sticking to the rules, you would exit half of the position here and then immediately put it back on the next day. But that's real world trading. But what's interesting here is, look at this. You never get an exit signal. And quite frankly, you still don't. Pretty interesting, right? Let's look at FSLY. Similar situation, right? Crossed over here. Moving average crossed over here. You have the exit for half of your position, but the moving average does not cross over. You put it right back on 2 days later. Now you have your full position on here, and you never get an exit signal until here, actually. Because remember, we didn't close below the moving average. We closed below it here. Now, this is a single part of frustrating for traders. We're like, I'm following the rules. Well, you never want to let a profit decrease by 30%. That's a huge reversal. So you, at some point, you could determine, has the situation changed? Which actually, that's a big deal. That's actually something I want to talk about. What we just went over was a system, a strategy within itself. It's a tiny, tiny piece of really understanding how to make money, but it will absolutely put you on the right track. Here's the reason you should consider trading with me for 30 days. And when I say that, I mean being in the boot camp with me for 30 days. There's a difference between blindly following the rules and trading. And I use driving as an example all the time. You don't just drive 75 no matter what. And trading is the same thing. At some point, you should be saying to yourself, how do I book a profit? When do I book a profit? Now, here's the reason I bring this up. That stock pulled back $30. That's a big move for a $100 stock. That's a 30% decline. At some point, you have to decide, am I okay with big drawdowns in exchange for the next big move? Or if you're up $50,000 on the trade, you say, you know what? I don't want to take less than 45 on this trade. And that's generally how I do it. If I'm up a good amount of money on a trade, and good is obviously relative to everybody, and the stock is, in this case, has now moved for 3 or 4 months, there are times where I'm going to say, you know what? It just exploded to new highs. It pulled back. It should not have pulled back. Something's changing in the stock. Only you could make that decision. And if you've ever read the Market Wizards books and those kind of books, every single person who's made hundreds of millions of dollars, they say the single biggest thing that you will never master, but it's a good problem to have, is the perfect entry. Honestly, there isn't really a perfect entry. There are profitable entries, exits, profitable exits. You'll never master profitable exits. It's a challenge, but a good challenge to have. So in this case here, you saw there's a big move to the upside, a big move to the downside. The situation has changed. So you need to adapt, which again, this is the reason we need to trade together in real time. You need to adapt when market conditions change. You say, was that just a pullback, or was that a pullback on a lot of volume? Did the situation change where I should reevaluate the trade, or should I continue to hold it because it was nothing more than a little profit taking? These are the things that make you go from chart reader to tape reader to profitable trader. I hope this system at least gives you a structure for saying, wow, that's pretty easy. Now I just need to learn how to use it to make money on a regular basis. Again, it's what happens between entry and exit is really, really what makes you profitable from 1 month to the next month to the next month. Once you start to learn how to not lose money, which is a huge part of trading, then you get to the other side, and then we're having a lot of fun conversations about, did I hold my good trades long enough? So if you find this video helpful, if you have questions about what we just discussed, absolutely leave feedback or comments below the video. Definitely subscribe to the channel. I'd really appreciate that. And if you really want to take this a step further, click down and learn about the bootcamp. I'd love to trade with you for the next 30 days. Have a great day.